Pinterest stock is down 17.3% in the last month when the S&P 500 index is up 3.1%. So investors are asking me what's going on with Pinterest, why is the stock price falling, and what do I feel about the company? Of course, I'm disappointed in this stock price decline because I bought Pinterest stock myself a few weeks ago at around $35 a share, and those shares are down. It's the only stock that I've bought this year that's down since I purchased it. I've bought the Trade Desk, Uber, Nvidia this year, and they're all up significantly since I purchased. Pinterest is the one of the few stocks that I bought that's down this year, and it's down significantly just in the last month alone. So I'll discuss a little bit about the latest developments with Pinterest, how I'm feeling about my shares, and what I plan to do with my shares. Am I going to dump them or am I going to add more and dollar cost average down? I'll let you know all of that and what I think about the company in terms of if it's a buy, hold, or sell at these new lower valuations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So looking back longer term with Pinterest, one of the things I've liked about the business is the strong revenue growth over the previous decade or so, increasing from 500 million to 3.9 billion. And it's done all this while offering a free product and service to customers with their social media app. And social media platforms, I think, are extremely lucrative. They benefit from network effects, meaning the more people that are on the platform, the more people want to use the platform. And so it's just a positive, virtuous cycle that builds on itself. Additionally, it's people like you and me adding content to the platform that the platform can then get to benefit from by showing advertisements to people that are engaging with the content that we ourselves are adding to the platform. So it's just a really lucrative business model, and we've seen how profitable this business model can be at large scale when we look at meta platforms. It's so profitable, generates so much cash flow, strong competitive advantages, and so we've seen evidence of this business model working very, very well. So that's the foundation of the business model is on very strong footing, and Pinterest has demonstrated an ability to effectively execute on this business model with 3.9 billion in trailing 12-month revenue, growing from 500 million in 2017, and doing so with improving returns on invested capital, which have reached 95.7%, among the highest of any of the companies I'm following, up from negative 281%. The cash flow from operations is also strong, and there's room for improvement as Pinterest generates some of the lowest average revenue per user among its social media accounts. So it's in the early stages of monetizing its international users, which are generating a very low average revenue per user compared to users from the United States and Canada. But also, the company is actually adding new people from the United States and Canada, something that's been difficult for other social media companies like Snap, which is not generating growth in that region. That's the most lucrative region. People from the US and Canada have the most purchasing power, so advertisers are willing to pay more to influence the purchasing decisions of those folks in that region. So they're still in the early stages of developing monetization of their international user base to bring them closer to that of the United States and Canada and even Europe. It'll never get there because the purchasing power of people outside of the United States, Canada, and Europe is much lower, but you can get it closer compared to what, Meta platforms, Snap, and when we used to get data on Twitter, they were also doing much better than Pinterest in monetizing their user base. So there's room for improvement. They're certainly not excellent in terms of, they're certainly not like mature in any stretch of the imagination in terms of developing and building the business and building it in a way that's optimizing their opportunity. But they're making good progress, and management has shown an ability to adjust to difficult circumstances relatively well, as the way they adjusted to the changes in Apple's privacy policy that made it more difficult for social media companies to target advertisements. They made a nice little adjustment to that, and they've recovered from those changes and started generating strong revenue growth above of others in the category. So I've been pleased with my evaluation of the management team. I certainly they are definitely a step or even two steps above Snap's management team, I'm really disappointed in. I would rank Snap's management team near the bottom of all the companies I'm following. Whereas Pinterest, I wouldn't say they're near the bottom. I wouldn't say they're near the top, but they're not as bad as Snap. Snap, I feel like could benefit from an improved management team. Whereas I don't feel that way very much with Pinterest. Of course, Meta Platforms, I think, has a very strong management team in Mark Zuckerberg and the team he's built. Pinterest, not so much, but it's also not so bad. Um, the valuation is very attractive. It's trading at a market price now of $31.87. The intrinsic value per share I calculated is $87. So it's significantly undervalued at the current market price. And then by the way, all these charts I'm getting from fiscal.ai, there's a link in the description if you're interested. When I see the forward price to earnings of 16.7, that's an attractive valuation for a company that's growing revenue at almost 20%, closer to 15% in most quarters. It's expanding its cash flow from operations. It's expanding the operating margins. It's expanding the return on invested capital that's already very strong. It's got a pristine balance sheet. The total addressable market opportunity is upwards of $1 trillion in annual advertising spending. Competition in the industry is not fierce, or it's not getting worse. You don't see these social media companies undertaking poor practices like giving people incentive to join the platform. That's when I would get really concerned if companies like Pinterest started paying people to join, let's say $2 or $5 to join, or $10, whatever, to join as a member. That's when I would start to get concerned. But I'm not seeing any of that kind of destructive business practice competitively within the industry. So I'm liking a lot of what I'm seeing. Now, there are some downsides. Of course, there's a lot of risk. Pinterest is, much more risky than Meta platforms, being in the position that it's in, not having as strong a management team, not having as strong a product as Meta platforms, not having as large a user base, and the platform itself is not as attractive as Meta's platforms. And artificial intelligence has been, it's been a question mark for Pinterest. There's been a lot of AI slop on the platform, but that's been true of many of the platforms. It's been more notable for Pinterest. Um, it's in one way, it increases engagement from existing users who'll find more things. But at the same time, it's annoying a lot of users that are going to the platform for genuine ideas and genuine images, and they're seeing all of this AI slop. So that's something that, um, a more curated strategy, that's the word I was looking for, in terms of artificial intelligence and AI content on the platform. So all that being said, what am I doing with my shares? So I'm not selling, that's for sure. I'm nowhere near interested in selling my Pinterest stock at these market prices. I really like the value I'm getting with Pinterest stock, and I would be buying more. However, right now, I'm more interested in adding diversification to my portfolio. So at the moment, like this week or next week, I probably won't be buying Pinterest stock unless, of course, I get to add. I have my eye on a few other stocks that I want to add. If I get to add those other stocks that I want to add to my portfolio, and I'm done with those diversifying moves, and then I circle back and I see Pinterest is still trading at these valuations, I'd be very happy to add more to my existing shares of Pinterest. I think it's more attractive value today, of course, with the lower price than it was when I bought the shares at around $35. So I still think Pinterest is one of the best six stocks you could buy right now. So that's my buy, hold, or sell. And then I have, my best, if I categorize it as one of the best six stocks to buy, It's my way of saying that I think it's a strong buy, a very strong buy at these current market prices. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.